Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and we are here to kind of get these markets right so you know where your money stands, because these markets ultimately are your money. And boy, oh boy, after Friday, we've got a lot to talk about. Let's jump right in and take a look at what corn's doing here. Corn's rolling over. Now, we've had the equities roll over, and it kind of acted like the corn went with it when we finally saw that equity market do what it did. So we've got a, Deese is a little bit old here, but we'll say Deese is off 5 1/4 cents at 581.5. March off 6 1/4 cents at 585.5. If we move over to see what's going on in the soybean markets, overnight they were higher, but they've rolled over too with the equities. Now, equities haven't rolled over completely, but they were up, say, over 400. Now they're only up about 150. So we've got January down 1 1/4 at 12.52. We've got March down a half cent at 12.62.5. Now they're just trying to stay in the neighborhood of unchanged here. We did have some decent gains in Kansas City in spring wheat. We'll take a look at what's happening in the Chicago wheat, and we don't really see anything there, right? March is down 9 cents at 831 1/4, with May down 9 1/4 cents at 837 1/4, but we're still off the lows by 2 to 3 cents. How about Kansas City? I just mentioned hard red, 5 1/4 cents lower in the Deese. Let's say March is 6 cents lower at 863 last. May is 6 cents lower at 861.5. And again, we're about 2 to 3 cents off the lows there when we did show some decent strength overnight. How about spring wheat? This is off 4 cents in the Deese contract, 2.5 cents in March at 10.46 even. May's down 5 cents at 10.34 1/4. But we'll notice that we've been about 5, 6 cents lower with the lows of the day there. And then lastly, let's take a quick gander over at that cotton market. We've got cotton trying to claw back what it lost on Friday, but it's got a long way to go. March is up 46 cents at 112.24. And we are lucky enough to be joined by Chris Swift from Swift Trading in studio. Good morning, sir.
Good morning, Scott.
Always great to have actual flesh and blood in the studio. I wish we had a better coffee machine, or I would offer you something.
That's okay. No, I'm all right. I've pretty much coffeeed up this morning.
I've eaten all the croissants. So, what do you I mean, look, we saw a bump, or at least a nice recovery in the equity market, but it's kind of tailed off a little bit here. We do see crude oil still hanging on to some of its gains. How is that affecting what we're looking at as far as those row crops and oil seeds, and then what it might do flowing into, say, even the livestock?
It's affecting everything. When you get that kind of volume and volatility in the markets, especially the impeccable timing of it all happening on a very shortened holiday weekend, then it's going to impact everything. The amount of money that is sloshing around out there, and the number of people that need these products. And we have done everything that we could possibly do with our federal government trying to hamper inflation, and seemingly like everything they do, it just makes it worse.
Well, and with this new variant, and I'd like everybody to know that we're going to probably have a new variant every 6 months until you and I are both well and gone. But that's going to be something that's going to roil the markets, and then also we still haven't gotten rid of the fact that we have Mother Nature to deal with too, right?
Yeah.
So and she hasn't really made the headlines as of late, and maybe even just a little bit here this morning. But I think that this is one of those times I hate being right, because we talked about it, say, on Wednesday about, hey, this isn't the time to be swinging for the fences if you want to kind of button things down here, because sometimes weird stuff happens. Mm-hmm. And boy, if there was never a better example about exactly what can happen, especially at that time. Yeah,
at the end of the year, everybody's trying to position square, get everything lined up to where they can enjoy the rest of the holidays and then come in fresh for the new year. But this clearly has thrown a monkey wrench in everything.
All right, so I'm not going to be fair. I'm going to be a little bit mean here.
Okay.
But I'm going to tell you, wheat, corn, beans, you got to pick one. Which horse are you going to pick for the end of the year?
Probably still wheat, because it's the one with the story and probably the one in the ground right now that can be most impacted by weather. And with the drought still there with the Minneapolis wheat, there's not much hope for it coming forward.
That's a great lesson for young brokers. Have a reason, or have an idea and a couple of the good reasons behind it. Mm-hmm. You just did that. That's awesome stuff. All right, we're going to go away, pay some bills. We're going to come back and talk to Chris Swift from Swift Trading after these messages. Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and that's why I wear this jacket. And it's also a cheap segue into talking about the cattle market. So why don't we run over and take a look at livestock, what's going on with that market. And I'll tell you, on Friday, these cattle markets were fairly strong. They did okay. I mean, they really didn't post massive gains, but here, it was kind of like this, really. We've had the Feb market up 27 cents in live cattle, 141.47. April up 45 cents at 144.30. If we move over to feeders, see what's happening there. Feeders probably getting a little bit of a bump as well today. Jan up 92 cents at 168.07. And we've got March up 82 cents at 168.80. So kind of up the upper end of the range, actually, even today. So Lean hogs, they took it on the chin on Friday, but they're coming back. Well, it's not really a comeback. It's steadying themselves here. February's up 32 cents at 81.35, while April is up 52 cents at 85.92. So back to Chris Swift from Swift Trading. Chris, there was obviously the equity story on Friday. We had the crude oil story on Friday. But you know what I took home with me on Friday? It was really to see how strong corn acted, and then how strong feeders acted with corn acting as strong as it was acting.
Right.
That seemed to me to be the package of maybe I should be paying more attention to this because something's telling me something here, and I probably should learn something from it.
Well, the cattle industry is taking a change in the cycle, so we're going to have fewer cattle to work with going forward. And last week's slaughter capacity kind of tipped the hand towards the packer that says, you know, when we want to, we can kill just about anything that we want. So we have taken that, and going forward, we think that it will be less likely for the amount of inventory available to tax the packing capacity again.
So is there some sort of strength that I should be gleaning from these markets going into the end of the year? I would say the old-fashioned me would say, should this be respected?
Yes, absolutely, it should be, because you've got two stories out there. You've got the drought that impacted the cow slaughter and the heifer placement for the last 8 to 12 months. Now you're coming into the spring of the year. If you get some kind of relief from that, those farmers and ranchers will hold back those cows and heifer again, make for an instant shortage of cattle. If it doesn't break, then we already know we've got fewer cattle to begin with. It just won't be as dramatic if it does break.
So what I'm getting from this is it's probably a good time to be wearing a cow jacket because this cattle markets could be. Go ahead.
Well, for once in, probably the last 5 years, we've been in a bear market, and it's been cyclical. We've just produced more than what we could consume at any given time, and now those cycles are starting to change where we're running out of inventory that has to compete against a hook on the packer side.
Oh, that's great because that's a good story, and we should probably center more on that because that's a good feel-good, and we need it right now, actually, too.
Yep.
So really appreciate it. That's Chris Swift from Swift Trading. We'll bring it back to Nashville, and I'll throw this back over to Tammy.